everybody? Justin, what up? Akbar, Code, Valerio. What's up? Weekly forecast. It's not a normal live stream, of course, but it's easier for me to do the live streams over producing a video, to be honest with you. So I've been doing every week, but if you're not caught up already, I just do my weekly forecast on live stream. That way everything's easier. What up, Vince? Good to see everybody in here. Hope you all had a good weekend. All right, I'm going to, what's going on, Syed? I'm going to put the charts on the screen, so let me know if you can see them. And then we'll get going here. I'll just type a 1 if you can see it. What up, Brett? Good to see you. Hope you had a good weekend. Charts up. Cool, cool, cool. Amy, hello. Good to see you. You've been a long time follower of me, so I appreciate it. Good to see you in here. Okay. I don't know if you could push it out there, but if we can get, it's funny. My Twitter is at 8,994, and I believe my YouTube is at 89. It's close. They're basically the same. So I want to see which one hits 9,000 first. If you can push it out there, get me to 9,000 on both, I'd appreciate it. Thank you for asking. My weekend was good. Let's get into the charts. I'm not going to talk too much to chat. I just want to get the weekly forecast out there. That way whoever watches it in the future is able to go through it quickly. So let's start out with NQ here, monthly time frame. Remember on Friday we had a new monthly candle open. So what does that tell me? I mean, it could tell me a lot of different information. It's too early to say, but if I'm looking at power of 3, right? If I'm looking at power of 3, which is what? Open, high, low, close. So how do you utilize that concept, especially on a monthly time frame, on a monthly candlestick where it just opened? Well, if I was to visualize the rest of the month, then of course I have to work with the data throughout the month to see where everything's at. Where we're at currently, there's too little information, but I'm going to make a hypothetical scenario, right, just so we all understand what we're looking at. Typically, if I'm in a bullish monthly candle, and I'm anticipating that, I'm anticipating higher prices in it, typically I want the monthly candle to do what? I want it to open lower. Why is that? Because you're looking at power of 3, you're looking at open, high, low, and close. You want to see the low of the month be set first inside of any type of PD array. In this instance, this would be, if it did do it, it would be immediate rebalance. So what's immediate rebalance? Immediate rebalance is right back to, if there's no inefficiencies, there's no PD arrays like a order block breaker, it's directly rebalancing back to the high or the low that was basically the previous candle in here. So this here, it could do that. Again, you don't have to have that manipulation. It's just all speculation what I'm looking at. I'm just trying to, obviously do a hypothetical scenario. The way we've opened already, and when I look at lower time frames, I'm looking at this, if this turns into a bearish candle, let's say this ends up being a bearish candle. Well, this is doing what? It's setting the high first. So you open and you're setting the high first. So it's an easier way to look at power 3 is accumulation, manipulation, distribution. Accumulation is you're looking at the open here. Price manipulates higher, and then you're going to see price obviously swing back the other way. So we could have a bearish monthly candle closure. There's too little time or too little information and too much time for me to make a decision. So I'm just looking at it. That could be a scenario. We're at all-time highs. So I've never traded here. I mean, it's been the past 3 months now that we've continuously kept pressing into new all-time highs on all the index futures. I mean, even me with 6 years of experience, I've never traded all-time highs. I find it a little bit difficult to do so because I don't have anything to reach for. It's going to be difficult for all of us, unless you're somebody that just likes to keep pushing higher and higher, and that's your style. But for me, I like to have levels and things I like to reach for. I don't have anything to look at. We're a no man's land. I mean, I can't tell how far this is going to go if it wants to reach for somewhere. And here, we could see how far price would want to reach into. Inefficiency there, buy side there. So I have to be very cautious. I have to be very nimble until I get clear direction, clear, decisive decisions I want to make. Then I'll play the hand. And that's where a lot of you last week I'm not saying particularly any of you, but a lot of people, especially Monday and Tuesday and throughout the whole week, they're pressing hard, right? And you saw a lot of people, whether they showed it or not, probably get their ass handed to them. And I know a lot of live streamers, besides myself, they didn't do too well. And it's no hate or shame, but when you have this amount of experience, I'm trying to lend it to all of you to say, if I don't know, if I'm not comfortable in these particular waters, I don't think any of you should be very comfortable in it. I don't think you should be overly confident and trying to push in anything. And if you've had a bad performance, I would say it's fine, but you can eliminate a lot of those things. You can have losing weeks and months, but if you can weed out those stupid decisions like just trading on days where it makes no sense. Last week you saw me not take a trade on Monday and Tuesday. People are extremely impatient in times when the price is just not doing anything. So it's either just time distorting. Not all accumulation, not all consolidation is the accumulation phase where price is going to move. No, sometimes price is just distorting time. It's just printing time doing nothing. And that's where people get this whole concept confused. I mean, it's just too little of information and too little time spent on these concepts for people to be teaching them. Anyways, hopefully it makes sense. There's really no bias, but I'm just trying to teach from the perspective of what I'd be looking at and how to utilize that. What up, everybody? I see you. Yeah, hopefully throughout my teachings and throughout my live streams, I've taught all of you to have extreme discipline, have extreme patience, and to see how, because here's the thing, you don't trust your own patience. As a newer student, it's hard to trust that patience. You feel like you're doing something wrong when you're not doing anything. And you see everybody else, you feel like the kid on the side of the playground or the side of the game. Everybody else is playing, everybody else is having fun, and you're not doing anything. But in reality, you are. You're doing something. No position is a position. You're protecting yourself and your capital. But when you're newer, you don't know how to trust patience. You don't know that that's a good thing because you don't really know what you're looking for. You don't really know what a good condition is. You don't know what a bad condition is. And that's what I'm trying to lend to all of you. You have to learn to trust your patience and trust your judgment. Otherwise, you're just a feather in the wind. Whatever direction price is going, whatever it's doing that day, you're just trading it. No plan, nothing. Just whatever seems right that day. I'll just press a button. That's such an amateur way to look at trading. You can't do that. As far as the weekly time frame, we've expanded higher above the buy side. We dropped back down into this inefficiency here as a reclaimed fair value gap. We expanded higher, closed above this down close candle. So you can extend that out to your right. This would be the last point of interest. If price retraced back down into this week on a Monday, Tuesday, possibly even a Wednesday, that would be the profile of what? Like a Wednesday low of the week profile. So when I look at a week, I'm looking at ICT's weekly template. And this is all just subjective. You're just looking at it analytically, just trying to make, some certain assumptions when you're looking at a weekly profile. If I could spot something where it's easy, and here, where I could see we could drop down into here on a Monday or Tuesday / Wednesday, that's setting low of the week profile for a bullish week, and then you expand higher out throughout Wednesday, Thursday, Friday. So we could possibly get that. This would be the area that, higher time frame inefficiency, where you could see price retrace into it. So it's all weighing options and decisions. If tomorrow and Tuesday we start ripping off higher, then I have to, I have to kind of anticipate. That's not a typical bullish profile. A typical bullish profile goes back to the exact starting point of this video, is especially on a weekly candle, you're trying to see which side is it going to unfold throughout the entire week. If the institutional order flow is bullish, the monthly, the weekly, the daily is bullish, then you're anticipating higher prices. But what that means for a weekly candle is you're anticipating the first 2 days, at least 3, to be dropping the opposite way of whatever the expansion is going to turn out like. So I would be anticipating price to drop the first 2 days here, maybe 3, depending on what's happening. And then we'd anticipate throughout the rest of the half of the week for price to roll over and expand higher. Now, if I don't get that setup, if I don't see price doing that, if I see it Monday, Tuesday, we just start ripping off higher, that would kind of signal to me that, well, I'm probably going to start anticipating that maybe the high of the week on a Tuesday, Wednesday is being set, and price rolls back down to carry out the rest of the week. So it would be a bearish profile. So you have to look at each week, each day, see how price is playing out to the expectations that you're having, and adjust them accordingly. It's never a one set, okay, I'm bullish this week, I'm anticipating this. No, I have to adjust and be fluid with the market. Whatever it's printing to me, I have to adjust to it accordingly. Otherwise, it's just you're marrying a stupid bias. You're being stupid. And this is where a lot of people, even my chat last week, I had one guy specifically saying that I was saying plan A, plan B all the time. Yeah, I do a lot because I'm always adjusting to what the market is giving me. But if I'm not executing on those ideas, it means nothing, right? Until I execute on an idea, then it means something. Then it's meaningful. But it's the number one thing I could teach all of you is just to be fluid. Adjust accordingly with logic when it's proven right or wrong, valid or invalid, and adjust yourself. So that's how I approach each week. Is I'm making a certain assumption. If I see something very valid, then I'll lean on that and I'll try to marry it. But if it doesn't pan out, then I'll unmarry it and I'll switch. There's nothing wrong with that. There's absolutely nothing. It is a sign of an amazing analyst, to me at least. So as far as the daily time frame, we dropped down into 2 weeks ago into the volume balance, bullish order block / discount. So from this dealing range low up to the high, we dropped down into optimal trade entry, volume balance there, plus this down close candle is your bullish order block. So take this away. Price expanded higher. If you go back to my weekly forecast last week, it was pretty dead on. It was actually dead on. I anticipated Monday through Wednesday we'd probably consolidate. Thursday and Friday we'd expand. How did I know that? If you have a large expansion coming off of a Friday, you're rolling into a Monday with an inefficiency like this, you're going to have to anticipate, all right, well, I'm probably going to consolidate. So Monday and Tuesday we sat out. Wednesday I participated. Then Thursday, Friday. From here, there's too little information for me to make a decision. If there was an inefficiency in here, then I would be anticipating tomorrow / Tuesday, Wednesday, we roll into it. So this is kind of a studying point that I've gone over personally. I'm going to anticipate, especially with Monday, with no economic news driver events. I'm going to anticipate tomorrow to be a very low volume trading day, and this day is going to print a fair value gap for me to be trading in on Tuesday / Wednesday. So I'm probably going to do nothing tomorrow. And per usual, Mondays I don't typically do anything, especially with no news driver events. It's unclear daily bias. I'm not going to do anything. So I'm going to anticipate, just like we did last week, Tuesday, Monday's going to set a fair value gap. So it'll look like this, right? Tuesday, we drop into it / Wednesday. Tuesday may not move out of it. Wednesday could move out of it and we expand higher. So I'm just visualizing how the week could look. And if something changes tomorrow, we just blast off higher, then okay, I have to adjust accordingly. It's never a set in stone bias, never set in stone when I'm, anticipating. Sometimes things change, and that's that. When we drop down into the 4-hour time frame, yep, NFP this week. So you want to get the majority of the week done by Wednesday. If you can be done by Wednesday, get your portion of the week done. Thursday and Friday, you're sitting out, observing, or not even trading. That's the protocol. That's the guidelines we've been given, and it works. And the only way you're going to trust that is seeing it play out with your own eyes. ICT doesn't say these things just for shits and giggles. He says it for a particular reason. So I'm going to take his advice. I always do. And I'm not going to be trading Thursday or Friday. And that's just the way it is. Look at BTC. I'm not going to do that. I don't care about Bitcoin. I don't care about crypto. That's my personal opinion. Looking at the 4-hour time frame in here, we have this inefficiency here. So we don't have a daily inefficiency, but we have the 4-hour. So the daily, to me, if there was one in here, that would be the parent. It's more significant. Everything else is the child. So I would want to be waiting for that daily to print. I don't see this just dropping into it tomorrow and then blasting off. Could. Again, I'll adjust accordingly. Looking at the 1-hour, we have a rapid displacement higher. And even on Friday when I took the trade long, I could have held on for this trade for another 200 handles, but you can't anticipate that. I don't know that's happening. None of us knew that. Anybody that tells you that, I mean, again, they're talking out of their ass. Like, there's no way I could have anticipated a 200 handle run, especially at all-time highs. You're in no man's land. I find this a little interesting. So this little inverse swing here, standard deviation, and -1.5, that could just be a coincidence. But it gave you some type of projection as to where price could have went. But you don't know. It could have stopped at 0.5, could have stopped at -1, -1.5, -2, etc. So it's all just a prediction. We have a lot of inefficiencies in here, so there's a lot. Which one would you choose to pick? Well, again, I'm going to have to adjust with whatever the week is giving me. But if you take a fib and you run it from the low, from this low up to that high, where's discount? Well, discount's resting down here. Do we need to travel into this discount? Not necessarily, no. Because if you're in an extremely bullish market, what we talked about, if the daily time frame prints a inefficiency, a fair value gap, it could IOFED it, and that thing could move higher, and we wouldn't need to drop down into these lower inefficiencies down here. We wouldn't need to drop down into that discount. It wouldn't be needed. So you have to keep that in mind, and I'd prefer those to be left open. To me, seeing this heavy of a drop lower, I would have to see what price is doing, but at that point, that's an extreme drop lower. Even though you're getting into a discount with a profile that's extremely bullish like this, especially on the monthly, weekly, daily, I'd rather see these stay as breakaway gaps. That's how you anticipate it, right? It's all predictions and assumptions, but that's preferably what I'd like to see. If we travel into here, at that point, we may collapse lower, because this could just be a run above buy side on all the higher time frames, and price collapses lower. So keep the other side, keep the other argument always open. I always do that. I'm always looking at the other side. What's a bearish perspective? How would that look out? Is there enough evidence in that favor for it to play out? If not, then I'm not doing anything. As far as like the 15-minute time frame, 30, when you try to refine it, it's just stacked. Everything's balanced, right? You have inefficiencies just overlapping over and over and over again. So it's not really an amazing sign either. When you try to look at like a 1 hour and you try to refine it, there's nothing in here. So it would make me weary. Even a 5-minute in here, I'd want to see, much like the 1 hour, I'd want to see inefficiencies in here, but there isn't. So you have to match the time frames, match the inefficiencies, the PD rays, see how they're all working, like an accordion. New week opening gap, yes, and there's one here, which I do like. I love, big new week opening gaps. They're very, very nice to trade with. So we'll see how that plays out, how we utilize it throughout the week. Too early to say what we're going to do with it. Thanks for early points to consider. Yep. I'll scan over. Here's what I'll do. I like to look at all the other index futures together, see how they're all working in terms of being symmetrical. So at the top you have ES, middle NQ, bottom YM. So what I'll do is, especially throughout the beginning of the week, is I'm looking at the higher time frames. I'm just seeing, has anything failed to make a higher high? Has anything not in sync with the other two? Primarily, I'm really judging a lot of my analysis off of ES and NQ, their correlation. YM, I can look at, I can get some information, but as far as day trading intraday, I'm looking at these two primarily. You can see here, I may not be able to see back here because I'm not on the continuous, but NQ, we all know it's at all-time highs, ES is at all-time highs, and Dow is at all-time highs as well. So those are all in sync. Is the only thing that I can really see is Dow has failed to make the higher high here. So the only time I'll utilize Dow, and especially the S&P, is if I'm anticipating like a huge crack in the correlation, like a turnover point, especially on higher time frames. If Dow is failing to make that high, right? You see how, look at where this high here, Friday the 24th, 23rd. You see how ES has gotten above it and Q's gotten above it. YM has failed to get above that. So that's what a bearish S&P divergence. Now, you can't automatically assume that price is going to drop lower. This thing could very well just get into sync with the other two. It's just lagging behind it, six sister, and it would want to climb above the high. But if we start printing bearish models and PD arrays and price continuously drops lower on these two, and this thing starts to drop lower, well, that may confirm the S&P. So that's how you're utilizing S&P. It's just a tool that is it's printing a divergence and a crack in the correlation before something happens. But you have to be able to see with clear evidence that price is willing to get in line with that SMT, whatever it is. So you have to be careful. SMT can be a little tricky, but majority of the time it's tipping its hand to you before the move happens. And you've seen me utilize it. I'm constantly referring to it. I'm constantly looking at the markets and if they're in sync with each other, if they're not, how they're all playing off of each other. So that's the only thing I can see right now for those. Let's go over dollar index. Again, this thing's just stuck in the mud. So it's a bit brutal to analyze. What up, Bree? Yeah. This thing is a brutal thing to analyze. I feel sorry for a lot of the forex traders this year. It's been difficult, man. That's why I would focus on futures if you're in forex. I mean, if it's working for you, don't let me sway you. But if you're having a tough time in forex, man, I mean, there's a particular reason for it. Price is lethargic. It's stuck in a range. Dollar index is stuck in a range. So we had a new monthly candle open, so we have this inefficiency in here. We closed beneath it. Could be a decent sign. We could just roll through it. Again, it's too little information. Weekly time frame. Hopefully the stream isn't lagging. Weekly time frame, we're still residing inside of this little small inefficiency, and it's just a indecisive closure last week and the last 2 weeks. It's too little of information for me to work with. We reacted off of this inefficiency here with the order block there. So with the monthly candle inefficiency, reacted off of it, moved to lower. Weekly so far reacting off of it. It's just we're in basically a 50-50 zone. I mean, and price is just lethargic, giving no clear displacement higher or lower. It's just it's a hard thing to work with and analyze. And the reason I'm analyzing dollar index, if you don't know, is it's an inverse correlation to index futures. So if this was clearly bullish or bearish, I could utilize it with NQ and the other ES. I could utilize it. It would be really easy. In times when dollar index is moving, I mean, it's so easy to analyze NQ and the other ones. It's so easy because if you have a trade idea and then dollar index aligns with it, I mean, it's bread and butter. It's basically, case closed, done deal, easy. So dollar index has some relative equal lows in here. We're still kind of reacting off of this bullish order block. It's taking a long time. So it would make me hesitate to even call higher prices than this. If we're sitting inside of a PD array for too long, again, it could be just time distortion, but it's just taking too long to do anything. So I don't really have a bias on it, but I'm just marking out the inefficiencies of scenarios that could play out. And then if something plays out, I can get in line with it. As far as this, we reacted off the daily SIBI as well. After running buy side, we dropped lower. So may want to run for the equal lows in here. If this thing runs for the equal lows, then we'd be looking at higher prices in NQES all across the board. It'd be probably pretty easy. But if this thing moves higher, then I would have to look at ES and the other NQ and be like, all right, well, we may see lower prices. I mean, that's probably going to be it. That's why you're having a hard time in Forex? Yeah, I mean, I couldn't see how you'd have an easy time in it. US 30 forms 6 sister, that means maybe price will go up before they... Yeah, possibly. Moving to futures for all obvious reasons. I feel like the last charter... Yeah, Vince, that's alright, man. Dive in. The water's fine, man. I mean, I transitioned 2 years ago. I still dabbled with the Euro last year. I mean, you can always move back. It's not like you're set in stone. Like, even if you get a futures account, you can still trade the Euro contract. You can still trade the British pound contract. Euro is 6E. So if you go to 6E, you could trade Euro. The contract here, it's the same thing. Pound, it's 6B. So if you want to trade, if these ever move back into your liking, then just trade the contracts. You don't have to trade Forex. That's the way I look at it. As far as bonds and yields, I don't have a very clear bias on it. It's really not giving me clear information. The way I'd utilize these as bonds is a inverse correlation to dollar index. So if dollar index moves lower, I should see bonds moving higher. And bonds move in sync with index futures. So you'd want to see bonds move higher index futures are moving higher. Same with, so yields, they're oppositely correlated to index futures, and they're in sync with dollar index. So if this moves lower, then you'd want to see dollar index move lower. You'd want to see bonds move higher. You'd want to see index futures move higher. And then just inverse the correlations there for everything else. But so far, these are moving lower. Dollar index is moving lower, so that's in sync. Bonds are moving higher. Index futures are moving higher. That's in sync. These are also moving oppositely to dollar index. So far, correlation is making sense, but the volatility and the movement, the volume behind it is not great. I mean, it goes off of your question you just had. How would you use DXY in a session? Would you stay on 1 hour time frame or lower time frames? It just depends, because I'm not even utilizing dollar index because the volatility, the movement behind it's not going to impact index futures right now. It's not doing anything. Dollar index can stay inside a consolidation, and index futures can freely move, vice versa. So it depends on the movement. It depends on the volatility. I could be in a 1 hour, and if it's really dropping, it's really, or moving higher, then yeah, I can stay on that. Just, it's a situational approach. As far as EU, the reason I'm looking at EU, this is solely inverse to dollar index. So if I can't get a clear read on dollar index, I will look at EU and I'll try to get a little bit better read. But this thing has been tough. I mean, it has been tough. The only thing I really annotate is the buy side here, and that's where dollar index has the relative equal lows there. So EU may want to reach up higher to grab that buy side. So what would that mean for dollar index? It may want to reach off lower to grab the sell side. But it's nasty, man. I mean, the weekly time frame is disgusting. The monthly is gross. I mean, there's not much to work with. And if you're wondering, like, okay, CJ, what's a bad environment? This is terrible. I mean, some people may say this is great. They're having a great time in forex. That's awesome, man. Good for you. But for me, no. It's tip of my hand to me. I'm not going to be trading in this slop. I mean, to me, it's not favorable. It's not clearly one-sided. It's not reaching for any specific inefficiencies, premium or discounts. There's no trend to it. It's just kind of right? So compare that to index futures and look at it. You're going to see the clear distinction and the difference between them. So hopefully that makes sense. Once these move, the algorithm isn't broken. It's not. It's just in a period of time where it's distorting time and it's not doing anything. It's going to happen. Even in index futures, this will happen. So you have to be ready for that. It's not always going to be just salad days moving in high, velocity. There's going to be times like this in index futures. So that's why I study the other ones, and I'm used to it, because you're not always going to be in the best market. And if I have to change to a different asset class, I'm comfortable doing that. I've traded forex for the first 3-4 years of my career, so I'm comfortable with it. I'm very versed in it. If I have to change to it, then so be it. I think it's a very stupid idea to stay in a range-bound, low-probability environment and be stubborn to not be willing to change. To me, it's just stupid, right? Why would you do that? Why would you want to invest money into something that is not worthwhile? The odds are not in your favor. Things are not in opening wide ranges. It's just a bad idea. So you have to be willing to change. Don't be so stubborn. I know some of you in here are willing to change. So that's good. You should be willing to do that. So I think that's really going to be it. I mean, as far as the economic calendar this week and what I'm looking at, this is my time zone, so don't get it mixed up. Monday, no economic news driver events. So what does that mean typically for me? Look at last week. I'm probably not pressing a button. I'm not going to do anything. It's fine. What about US 30? What about it? Tuesday, we have a news event driver half hour after the open. So that's good. Tuesday, we could possibly see the low of the week, maybe. Wednesday, same thing. We have 3 red folders at 2 different times, so be aware of that. Thursday, same thing. And then Friday, we have NFP. So typically, what is the protocol for an NFP week? You're looking to get your chunk of change out of the Monday, Tuesday, Wednesday, and you're sitting out Thursday and Friday. So this is where even me, as a younger student, I would lose on a Monday or Tuesday, even a Wednesday. I'd be like, shit, man, I don't want to sit out Thursday and Friday. I don't want to do it. ICT says not to do it, but screw him, man. I'm just gonna go against him. I need my money back. Um, and then you end up losing Thursday and Friday as well. It's like, okay, cool. So sometimes you have to end the week on a loss. You have to be willing to eat that because you're gonna end up losing more anyways. Don't fall into the fallacy of I'm gonna end up making my money back. I mean, that rarely ever works, especially if it's against rules and guidelines. It's not a smart idea. ICD said in his video and a Monday NFP week, yeah. I mean, it can be, but again, if I don't have a news driver event and things are not in my favor, then it doesn't really matter what the week is. Then I'm probably not going to trade it. I mean, typically, yes, he's stating that because you want to get your, your trades in on a Monday, Tuesday, preferably. But if nothing's there, I'm not going to press it just because it's NFP week, and just because I want to get in there before, I'm not supposed to trade. And I'm following guidelines of my rules. So I think that's going to be it for this weekly forecast. I hope you guys enjoyed. If you can subscribe to my YouTube if you're not already, and my Twitter. If you can follow me on there, I want to push it to 9K by tomorrow morning. That would be cool. But if not, I will be live streaming tomorrow, 15 minutes before the open. And until then, good luck and good trading, buddy. Peace.